Hi everyone, today I'm talking about Monster Beverage or MNST. Yesterday we saw them report Q1 earnings, which were not where pretty much the consensus of the earnings were going to be. They were about 2 cents short of where they should have been, and talking about revenue, they were about 40 million behind what they should have been reporting, which is a bit of a big miss on the revenue sales. But potentially, I think this is a good buying opportunity, and I might take a hold of this myself. Um, Obviously, I've got Constellation Brands, which is another beverage company. So I don't know. I'll probably keep them, and then maybe I might free up my Facebook shares, and then this might make Monster Beverage available for me to invest in. But overall, I think it's a very good company to be looking at to invest in. So I'll just go a few things why. So Monster Beverage, really easy company to be understanding. Obviously, the main purpose of Monster Beverage is the drinks. So it's not a big business model to be like getting your head around. Really, that's all you need to know is that they're selling drinks. At the moment, it's priced at $54 per share. The target for this year is $68, and its all-time high was not too far below that before it had a dip. Overall, it's about down 20% now, not 14%. PE ratio wise, we're looking at a PE ratio of 37, which is a little bit high, obviously. Obviously, want that to be a little bit lower, below the 30s would have been ideal, but it's not. The forward PE on it is about 34, so not a big massive difference, really. But the figures ahead look pretty good for Monster Beverage. So if we look at the earnings per share, this is the forecast for 2018. Earnings per share is 1.86, which is going to be an increase of 25% from last year. And Monster Beverage have also announced that they're putting another 500 million to the buyback scheme of shares, which is really good. Also, Monster Beverage, I've gone through the balance sheet of Monster Beverage, and they do have a lot of spare money available, something around 300 million. And sales wise, we're looking at 3.8 billion, which is an increase of 11.7% for this year, which is pretty good. So overall, we've seen a nice double-digit growth on the EPS and the sales. Obviously, this is really healthy because it's in the 20s, and this one a little bit less, but it's still double-digit. And I always say double-digit growth is always a good thing to be seen in a company. So it's potentially a buying opportunity that I could take hold of. I think if I was to buy at 54, I think my price target would be 66, because that's a 20% gain. And P ratio, obviously that's a little bit high, but it's not too bad for the current market that we're in, really. There's a lot of companies higher than that, and I've actually invested in companies that do have a higher PE than that. So overall, we've got some really good figures, good growth figures. It's not like growth slowing down, even though we miss the Q1 earnings. So overall, I'm pretty happy with this company, and it could be potentially one that I buy in, especially after this big dip. A bit like ANET, Arista Networks, when that happened. Could be another stock that I go in because of the dip and hold it for a little bit. So guys, let me know if you're invested in this company, and I'll see you on the next video.